Hi, welcome to the Market Alert for Tuesday, the 10th of June 2025. So stock rally fizzles as momentum slumps, Apple dumps, but silver oil melt up continues, which is good to see. US stocks mostly eked mild gains amid focus on China-US talks, which obviously we're going to see more about that as we get into the beginning of July. And stocks and bonds chop as markets await China's trade updates and US CPI. And the CPI is obviously impacted at the moment because markets were quiet yesterday, but on sort of choppy to the upside, as it were. Today, what economic news we've got? GBP, average earnings index, neither here nor there. Claimant count change from the UK. It used to be called the unemployment numbers. And then President Trump is going to speak at 9 p.m. tonight when the markets are closed, and that's probably a good idea. Right, let's have a look at yesterday's choppy session and kick off with the Dow. So yesterday we see the Dow moving up in the daily chart once more, 42,924. Let's just go to the weekly chart, it's a lot clearer there. You can see we're quite a bit off the all-time high there at 45,077, and they say in the daily chart, you can see this is a recent high there, not the all-time high for this market. But price is above the 200 MA, and we'll get through this and continue higher once we get the CPI numbers tomorrow. As you can see, a bit of a shakeout to begin with. The buying comes in, market reverses, moves back up. Selling comes in, down to the towards the 50 EMA. Market selling disappears within the next 30 minutes and the market moves up. And of course, this is also positions being closed out at the end of trade. Market's already been up to yesterday's high in the overnight and is sideways to higher there at the moment. So looking at the daily chart, I know it's above the 200 MA. It's likely to continue in this direction despite the world falling apart around us and the fundamentals having no link with reality and the markets whatsoever. There is a massive disconnect going on here. In the German DAX, we'll kick off with the weekly chart. Again, you can see we're sort of been sideways now for the last couple of weeks. This is continuing as we look at the daily chart. You can see that defined sideways move. The market needs to get through the 24,487, the all-time high. And then in the 30-minute chart, we can see there was some weakness around yesterday morning. That soon changed when we had the buying come in from the US, and also the DAX playing catch-up in the cash market as well, which is probably why you see some selling going on there, because they couldn't sell yesterday. It was only the electronic session, with it being a bank holiday. Markets then moving up overnight. Just look at the 200 MA in the 30-minute chart. Needs to take this out and head up to the high of yesterday. And I suspect there'll be no trouble doing that this morning, because that's where the markets keep wanting to go, to the upside. And in the S&P 500, again, let's look at the weekly chart. You can see we've just gone through the 89% retracement, heading back to the all-time high. The all-time high, if you wanted to make a note of the number, is 6147.6. We'll save that. The weekly charts at the moment seem to be a lot clearer than the daily charts. So the daily chart you can see is rather choppy, but it's still in an uptrend and heading back to the all-time highs there, and also other ones in between that are creating a bit of resistance there as well. The 17.4 has been taken out, and the market continuing to move higher, and I suspect we're going to see a lot more movement on the upside this week than we are downside, with those CPI numbers tomorrow. 30-minute, we have a bit of a sell-off to start the cash market. Huge volume. That disappears in the next one. Buying comes in and a bit of profit taking before the close. Overnight, something has bolstered the market. It's back above yesterday's high already. And the only thing we're looking at in these markets at the moment is highs and also the lows to see the market buy off these important areas. Meanwhile, in the UK, again, the market sideways to higher. Weekly chart shows that we're back to more or less where we saw the Trump nonsense with these trade tariffs kicking off earlier on in the year. Market's now reversed and moving up, and we're heading back to the 8910, despite Rachel from accounts reintroducing the winter fuel allowance, and then one of her team lying through his teeth in an interview yesterday with Sky News when he refused to apologise for what they'd done, saying that the economy was on a firm footing now highest growth in the G7. You can't make this nonsense up, can you? You know the lying, the lips are moving, and now they're going to print billions for nuclear and all sorts as well. It's whatever suits. It's whatever suits. So yeah, this is moving up, and it will make a new all-time high. I have no doubts about that, because they're going to be thrilled tomorrow when she looks at the spending numbers as well. It's all inextricably linked, rigged game now, because there's no way they should be doing this. I mean, you get Liz Truss, if they didn't want her, they crashed the markets. It was an agenda to do that. All you do is just bring in, sell the futures on the pound, bring the pound down, and then you make the excuses that if they'd have continued with the budget that she had, then the pensions would have fallen apart because of the interest rates on the gilts. And guess what? The gilts interest rate is higher now than it was then. So again, like I say, it's all a rigged game. Let's have a look at the US dollar. And in the US dollar, you can see we're stuck in a bit of a sideways move there as well at the moment. I wouldn't be surprised to see this move up today, but tomorrow when they get released the CPI numbers, if there's any prospect of a rate cut, you're going to see this move lower. Let's have a look at the metals from yesterday. And silver continuing to move to the upside there. It's looking nice and strong there, up yesterday at 36.88. We've got a long way to go in this market. $50 the first target, if massive if as well, if prices hold, to take out the 1979 high and also the 2011. It will be very interesting if we do get to that level. Meanwhile, in the 30-minute chart yesterday, we moved higher to begin with. We saw a bit of a pullback, and then the market spiked again. Overnight, they've had the chance, because it's quiet, to slam the price with the futures contracts. But now it's starting to move back again. It's now starting to look attractive, get momentum behind it, and continue to move to the upside. Meanwhile, gold is lost its fizz at the moment. It's just treading water. It's it needs to. As we mentioned before, if you look at the weekly chart of gold, there we go, that's the weekly chart. So for the last few weeks, it's been trading sideways. This is healthy. It's not falling out of bed. It's just consolidating, ready for another move to the upside. And there you can see that in the daily chart and the 30-minute chart. Again, you can see this having been slammed overnight. It also means that, of course, the gold-silver ratio continues to move lower. So let's take a look at this. And there you can see the last 3 days, massive moves to the downside. Needs to hold, though, at the sort of 89 level there. So we'll just have to see what happens over the next few days with regards to this, as prices continue to, or are allowed to move higher in the silver price at the moment. Let's have a look at yesterday's trades before we conclude. So in yesterday's trade, as I've warned, it's become choppy. I said last week it's very difficult in the afternoons at the moment, and the mornings also are turning into the same. We get this initial move, which you can see there, up and down within a 50-point range. The market breaks it, goes down to the low. They like to bring the market back from the low if they can. However, on this occasion, they slammed it through the low and then got rid of anybody that was going long here and had the stops placed here were taken out. So you can see prices come back there, wanting to get back to the low. The market then became sideways to lower, but then started to move off that low for a quick trade to the upside. So this sort of price action is not uncommon. You think, oh, we're at the low, and then they slam it, and then that's the time to consider anything to the upside. The market then just becomes really quiet, as you can see there. Tiny range, 15 points per bar for 2 minutes. So again, you're seeing a loser there, followed by another scalp, and then trying to hold at the low. And then we might as well just whiz through here, because we see the market moving back up to the 200 MA, and then again trading way down below the low as the Dow futures came on stream, and they saw the negativity in those prices before we got to the afternoon, where the market became once again very, very quiet. You can see struggling there with the 200 MA, starting to show some red, then back to green, and just stuck in this range. Again, you can see the switch there, and then prices sitting sideways on the 50 EMA and the S2 as we had two consecutive losers. But I have warned about this in the afternoon. Sometimes it's just better to stand aside, particularly when you've got something like the CPI numbers looming a few days later. So you can expect more of this during this morning and this afternoon as well. Okay, a quick look at where we are overnight, and prices very, very quiet. As you can see, they're tiny bars just ticking up and down and not doing an awful lot. Again, waiting for the CPI numbers, and then the focus, of course, is going to be on the FOMC meeting, which is probably next week, and then we head towards the 9th of July for those resumption of trade tariffs. Whether it happens or not, who knows. But anyway, this is for today. So have a great day, and as ever, thanks for watching. See you in the next one.